Hey traders, Raghee here. Let's get a quick audio and video check in. Should be good to go. All right, great to see everybody. Happy Tuesday. We are continuing to sort of slog through August. Now, just to put August in perspective in terms of what it is we're dealing with every year. So this is not just this August. This is any August that you're ever going to trade through. This one's been certainly rife with geopolitical chatter, political chatter, down to all the drama that continues around replacing the Fed chair. There's just no lack for drama. It's almost a soap opera more than it has been market driven, earnings driven, monetary policy driven markets. And that's okay. You're going to deal with this from time to time anyway, right? Maybe not quite this concentrated, and maybe not quite so much impacting probably the lowest volume month of the year. Now, why do we care about volume? Well, for something to continue, there has to be participation. So anytime you look at an uptrend, right, like we had, say, through July or June as compared to August, remember that for an uptrend to continue, someone buys, let's use the S&P here, for example. Let me grab my drawing tools here. So let's talk about the S&P, for example. If someone were to buy a dip like we tend to buy, right, the only reason that dip works is because someone else is willing to buy along with us. We're never alone in a winning trade. So this idea that we see something that nobody else sees, that's categorically wrong. We might see something at a specific price level that nobody else sees. But in order for any trade to work, we cannot be alone in the trade. So let's say we buy a dip, and let's say somebody else buys a rip. They buy the movement higher. The only way either one of those is going to work is because someone else comes along and says, wow, we bought it, say, 6,300. Someone who bought a rip bought it, say, 6,370. Someone else is willing to say, hey, I'll buy it 6,390. And then after that, someone else is going to say, hey, I'll buy it 6,410. And on it goes. Someone's got to be willing, like a line, a queue. So the person behind us has to be willing to buy for at least what we paid for it. That's support, or higher than we paid for it. That's momentum. And if support and momentum can continue to loop, right, like a repeating cycle, what the end result is a trend. And you can see that through June. You can see that through July. But come August, what happens is there used to be summer. By the way, for those of you that are trading some time, summer used to be from Memorial Day to Labor Day, and volume was just absolutely, I'm talking 25, probably 20 at least years ago. So they joke and say the money goes to Hamptons, Memorial Day to Labor Day. And I used to take summers off. Now, it's been a lot of decades since I've done that, but I used to take summers off because of this reason. And then slowly, summer got reduced really to August, and probably most concentrated into the last 2 weeks of August. So all throughout August, we've been dealing with just the mechanical issue of a lack of volume, right? And that simply means the person behind me and behind them and so forth, it's just not there, right? Volume is people. Volume is participation. And when we're lacking that, we end up with, we could still be bullish. I'm not going to call the S&P not bullish. I'm not going to call the NASDAQ not bullish, but you'll notice that continuation has been far more difficult to come by. Now, that doesn't mean we break down because, by the way, movement lower needs that same cue. People need to be online to do that too. They have to be lined up, and whoever sells, someone else has got to be willing to short lower and lower and lower. So it works in both directions. So what do we get? This is kind of like a leaf floating around on a breeze, right? And if you're thinking, gosh, Rog, yeah, that's exactly how August has felt. If you're ever, and I'm going to tell you this, trader to trader, life happens and people want to go on vacation. And, some of my buddies, my friends are taking their kids to college and dropping them off at campus. This is where, if you have things to do, there's two things that I love to do in August. One, I don't vacation. I mean, I can take this life, this trading, these charts everywhere I go. So I'm the wrong person to talk about vacation. However, I love, and I don't know if you all can see the bookshelf behind me, but I love to use August. Someone told me once it's called separation season. When everyone else is doing what they have to do sometimes or just phoning it in, I'm going back to books that helped me become the trader that I am. I go back and review my notes. I go back and review my trades. I do all those things that are going to give me an edge come fall when that volume comes back. Remember, everyone else, they're having their wine spritzer by the poolside. Good for them. But to me, I use this time to go, what is that part of my trading game that could be better? And I work on that. So I love August in that regard, but I'm always going to be aware of this lack of participation. So I like to put this stuff into context, give everyone at least some tactical ways to deal with it. And for me, I love to find that edge through August. I'll go back and review books. I'll go back and review my notes. Notes are so important to have. I'll go back and review my indicators, my own stuff, right? Because it's easy to forget the things that we're doing maybe subconsciously, and then there's no way to improve it. So that's the way I look at the way in which we can use August. And by the way, it's not been a terrible trading month. It's just not been as good as June and July. And now we know why. It's not as if the setups aren't happening, but the follow through is really a pain in the neck. All right, so let's get to what we've got coming up today. The bell's going to ring in about 3 minutes. We already had building permits. We already had housing permits. A lot of people look at building permits as sort of a front runner to housing, right? You're not going to pull a permit on something you don't intend to build. So when we miss on building permits, it's not great for housing in terms of the companies that are going to benefit from building and selling homes. The last 2 weeks, like I mentioned, of summer are historically some of the lowest volume of the year. All of August is, but the last two can be particularly difficult. And then we have no FOMC meeting, right? And what we're replaced with is they go off. See, even the Fed members take a vacay. They're going to go run off to Jackson Hole, which I hear is just a horrible part of the world, right? What a life. Going off to beautiful Jackson Hole they go. And we're going to have this Jackson Hole symposium come Thursday. And that's the stand-in for the FOMC meeting. Now, remember, we're expecting rate cuts in September. They are not just probable. They are expected. They are fully discounted. And that means whatever we hear from those Fed members, and golly, we're going to hear from them all, is going to be geared towards, are they sending the messaging that traders and investors want to hear to be as certain as we are about that quarter point rate cut in September? And could we see at least one more rate cut by December, right? Which is what makes all this Fed chair replacement chatter so high school, right? So even middle school, I don't know. Are middle schoolers meaner than high schoolers? I think so. I do think so. So it's such middle school stuff, but the market hates uncertainty. The market hates drama, right? And that's what we continue to deal with. All right, so pre-market, bell's going to ring in 90 seconds. Where is the price in relation to that sentiment line in the sand, as I call it? That's that previous session close, the PSC. Right now, the Dow and bonds are sitting above the previous session close. That puts them sort of in the, they call it the bullish hemisphere or the bullish side of sentiment to start the morning. Things could change. Obviously, we'll absolutely expect those candles of unusual size nod to the Princess Bride, the COUSs. What do we get at the bell? Volume, participation, attention. And we get these large candles. They can go in any which direction. We don't want to get caught up in the melee, the mosh pit of the first 5 minutes. We let about 5 to 10 minutes go by after the bell. That allows us to see some volume come in, the spreads normalize, and then we can get to work. And probably one of the biggest mistakes I see oftentimes day traders make is put a trade on in those opening moments, presuming that that sort of thrust to the upside or downside is going to be the movement for the morning. So we're going to wait for the first 5-10 minutes. And another thing we can note, especially in August, because follow through is so difficult, what are those early signs, right? What are those early signs of follow through? What can I start to look at as early as 10 a.m. Eastern, 30 minutes after the bell, and say, hey, there's a probability we could keep climbing higher or sinking lower. And that's going to be escaping the range of that clearing period or clearing range, high, low. So between 9:30 and 10:30, we'll put in a range. And yesterday, everyone saw back and forth we went. If you put a clearing range high low on your chart, you'll have a much better idea that of when there is a move higher through the clearing range high or lower through the clearing range low. There's a probability of follow through, just a probability, right? So we can put some lines out there. Again, always measuring sentiment. Are traders largely bullish or bearish? The first step is, are we above the previous session close, right? The second step would be, can we get above the clearing range high? And so incrementally, we can start to look at those things. If you're wondering, Raghee, is there a third stage? Yeah, by 10:30, we have what's called the initial balance range. Why they call it that, I'll never know, but it's the high low of the first 1 hour after the bell. If we can stay above the previous session close, take out the clearing range high, and take out the initial balance high, that's kind of one of those days where the market tends to trend. So again, if we can know where these mile markers are along the way, we'll have a much better idea of the flow, the participation, the bullishness, the bearishness. And again, we're going to use August in a way that, frankly, most traders don't, right? And I was just watching a video the other day, and, all these morning routines. I have a morning routine. Everyone's got something, even if it's just wake up, brush your teeth, have some coffee. But if I can find a way to, on any given day, have a slight edge on having a plan, being ready for whatever it is that the day is going to bring, you're seeing mine right now. Right. And it's not as if the morning routine has got to be something that takes hours and hours, because these levels that I'm talking about are either very easily identified through time, or because these things are now, if you're in the Sector Secrets Mastery, we've got most of these automated. So I just have to let my charts tell me what I should be thinking. Not I wake up thinking, hey, today should be an up day, or hey, today should be a down day. We can should all over ourselves. Just we'll assess what's going on and we'll take it from there. Yeah. All right. So right off the bat, we can see the candle of unusual size is to the downside in both the NQ and the ES. Remember, the YM, the Dow, is above, and it's not weighted like the NASDAQ and the S&P. So whenever the Dow is heading higher and the NASDAQ's heading lower, leave the S&P alone. That's why it's just such a tactical error to place so much emphasis on, I'm an S&P trader, whether that be futures, whether that be ETFs, whether that be the S&P, SPX. It's just an error in understanding what actually moves the market. The ES is never the captain of its own ship. And unless the NQ and the YM are generally moving together, it's going to be super difficult. All right, so Dow is probably, relatively speaking, the strongest of the indices. I'd say the NASDAQ is the weakest. So that automatically allows us to do what? If the Dow is strong, right, which is, again, relatively speaking, if the Dow is strong, I'm going to immediately think about financials. I'm going to skip tech because that's NASDAQ weighted as well. I'm going to take a look at healthcare. We can take a look at energy, industrials, transports. Those are the sectors weighted within the Dow. Now, if the NASDAQ is weak, which is what we have this morning, I'm going to think about technology, semiconductors, communication, and consumer discretionary. So you can see right away when you have a top-down approach, which is exactly what we do here in the Sector Secrets Mastery, I can start to differentiate rather than painting the whole market with one brush. Oh, the S&P is down. Guess what? The Russell does not give a rip, right? The Dow kind of down, but not as weak as the S&P and the NASDAQ. So we can start to differentiate. If we want to be bearish, I'll focus on the NAS. If I want to be bullish, I'll focus on the Russell or the Dow. So we can start to determine that in those early first 5 minutes. Really important. So the next thing I want to do is take a look at the Russell right now is flirting with the previous session close. Right? It hasn't quite made it above. And if it continues to rally, we can look at it, the IWM or the KRE, if it continues to strengthen. The KRE actually looks, this is regional banks, the KRE actually looks a little bit better than the Russell. So this is not a huge sector within it, but probably the most influential when you look at the Russell, which is not a high concentration weighted index. A couple of the things we have to be aware of this morning. We are under a bit of a time crunch. Okay, so that's another thing. Let's talk about that. Do we have a time crunch? So is there a time crunch? What that means is there an event at 10 a.m. at the end of the clearing that we need to be aware of? And yes, we have Bowman, Michelle Bowman, FOMC speaker, FOMC Bowman at 10 a.m. All right, so when we have something like that, FOMC Bowman at 10 a.m., ideally, if there is going to be any kind of day trade, and I'm looking right now at my screens, bonds could be interesting off the Darvis. Let's go take a look at that. Bonds could be interesting off the Darvis. So we have a Darvis level right here on the 5-minute chart of the bond futures. We might get an opportunity there. Let's move this 5-minute, make it a little bit bigger. Okay, so that could be interesting. We're above the previous session close, that line in the sand, and that may not be a bad thing to consider. But if I have a Fed speaker coming up at 10 a.m., do we think yields will be potentially in play? Yeah, they could be in play in a big way. So not only do I need that to trigger off, say, 114.01 for long TLT calls, I need it to follow through, ideally by 9:55, because I want to think about A, having a target, or B, having an eject button where whatever Bowman might say could create a lot of volatility in currencies and in yields, and I don't want to be in a susceptible place within that trade. I want at least to break even or just to close the trade out. And that means the trade's really ideally got to trigger by 9:45, 9:50 latest. So that's what the time crunch does to us in terms of dealing with this volatility. All right, what else do we have here? Let's take a peek. Let's start taking a look at some of these sectors. The market's been open for about 7 minutes now. Let's take a look at some of these sectors. All right, here we go. All right, so taking a look then at, yeah, I do like the bonds at 114, but that may not happen because price has to come back down to this level here for that entry. And unless it does, and then my first target would be the halfway mark, or at very best, this level up in here where the Darvis high resistance is at. Notice we don't have a trend in the bonds. We had a bullish trend. We had a bullish trend, but it's neutral right now on the trend. So this lower row, this is neutral. Okay. Let's see what sectors might be showing some early strength or weakness. So if I know NASDAQ is weak, I'm not going to be surprised to see that XLK is weak. I'm not, wow, okay, XLK is pretty darn weak. SMH has bearish momentum. XLK has a bearish trend right now. Is there anything bullish? Well, financials have bullish momentum, no bullish trend. Not surprising when you consider the Dow's been resilient. This is the number one sector. The next one I'd look at in terms of specific sectors that would be strong due to the Dow would be healthcare, above the previous session close, industrials, XLI. So think about the individual stocks in these sectors. So if we're bullish, that's where I'm looking. If we're bearish, I'm not going to look for weakness in these sectors or that index. IYT has bullish momentum. XLP this morning also has bullish momentum, but no trend. The only trend is the downtrend right now in XLK. All right, so next up is, what else do we have? XLY is neutral. So if the NASDAQ were to bounce, I'd probably take a look at consumer discretionary as probably the more resilient part of the NAS. So if there is NASDAQ strength, I will look at XLY symbols. I'll look at XLY names. And those are going to be names like Amazon, Tesla. And another really easy way I can do this is we'll go on over to our multi-chart, and I'll take a look at the stocks in the order of their weighting within consumer discretionary. So let's take a look at that. And I want to find something that's a little bit positive. What's leading the XLY higher? Amazon's not down, but it's not up. Tesla. Okay, Home Depot. Home Depot's moving higher. McDonald's is moving higher. So what else? TJ Maxx is moving higher. Lowe's, Nike, O'Reilly. So these would be potential candidates to the upside today. All right. So not the tech part of, now a lot of folks forget that the NASDAQ has consumer discretionary fairly heavily weighted within it. And these aren't, look, you look at Amazon and think tech, but most of these are not, right? Most of these are not. Maybe Dash for a day trade. So that's if the NASDAQ starts to recover. That would look specifically there. If the Dow continues to be strong, let's take a peek at XLF. That's the number one weighted sector here. Dow continues to be strong. I'll take a look at maybe JP Morgan, Bank of America potentially, Morgan, American Express, Citi, Schwab. Okay, so those are things I'll look at that are strong within. And XLF itself could be, something we could look at as far as a liquid ETF on the option chain that could give us an opportunity to be bullish. All right. So I'm just looking at things that are up today in sectors that would either be up, or I'm looking for things that are down today in sectors that would be down. I'm not bearish, gang. I'm really not. It's tough to be bearish when the overall flow of the broader averages has been up. We're still expecting rate cuts in the Federal Reserve. It's not been unusual to see a little bit of weakness and then some recovery. But if we're going to see continuation, that's we go back to what is Bowman going to say and what is the high low between 9:30 and 10. And that's how we're going to figure out what, if anything, we're going to do here this morning with the day trades. All right, moving on then.